Good day, guys and gals. This is Ryan from TrendLizard.com. Hope you're all having a wonderful day. I know I am, despite a super slow market for the last several months. I wanted to post a video today on SPY. I'm sure you know this one. It's the S&P 500 ETF. I think it's the most widely traded ETF out there in the world, so I'm guessing you know this one if you're a trader. So I think it's pretty important. Obviously, it's a super good gauge of the market. It more or less is a sign of what the U.S. market is doing step for step. So this is pretty valuable information. You might be wondering why your stock portfolio hasn't done too much in the year 2018. There is a good reason for it, and trust me, you're not alone. It's kind of what's been going on in the world, and I'm going to show you why and what to expect going forward here. So I'm going to start with a really large 30,000 foot view just to give us a little bit of perspective of what's going on and zoom in all the way into current time action from there. So SPY started back in 1993, gave us a really nice trendy move into the 2000 high. You might remember that one. That turned into a very massive bear market. That bear market reversed. The high was tested, actually breached a little bit before the market tanked once again. So while that was a very wild ride while it was happening, in the end, it was just one big counter-trend pullback that ended in 2009, gave way to the current bull market, which has been going for more or less unadulterated for about 9 years now, or even beyond that. So it's been pretty good living since 2009. There hasn't been really any notable pullback during that time, and we've just kept trucking from there. So things are going to get more interesting as we move forward here, but as is, this massive 9-year bull market is still in play, and higher prices are coming. So that's the good news. Let's go ahead and zoom in on this move right here. So this is a look at that nice advance. Now, we use Elliott wave theory to analyze and forecast where the stock market's going. The Elliott wave theory is scary for a lot of people, but it's really pretty simple when you drill down and really look at what's going on. And the basis of the whole thing is that trends happen via 5-wave moves, while counter-trend moves play out in 3 waves. So let's step out real quick here. You can see this was a nice 5-wave move. Obviously, that was a trendy move. This was a counter-trend move. It was a 3-wave move, 1, 2, 3. Now we're back in a trendy move, which again is a 5-wave move. So once a 5-wave move completes, it gives way to a 3-wave pullback. Once a 3-wave pullback completes, it gives way to a 5-wave move. And that is the very essence of the Elliott wave theory and how we figure out where the market's going on any time frame. We can do this on a second time bar or all the way up to a weekly time bar. So it applies on everything. Right now, obviously, this is a pretty long-term outlook, but it gives you the gist of what the Elliott wave theory is all about. So with that in mind, this is one large 5-wave advance off the 2009 low. It is getting closer and closer to completing. Once this 5th wave completes here, that's going to be the end of the bull market. So that's something to definitely look forward to, or at least look out for as we get going here, and over the next year or so, the potential for a pretty important high is in place. But if you look at every one of the waves within this 5-wave advance, it is also a 5-wave move. So like I said, it applies on different time frames. This happens to be a really long-term 5-wave move when you look at the black 1, 2, 3, 4. But as you drill down, you can see the blue 1, 2, 3, 4, 5. There was a 5-wave move. It completed. There was a pullback. Or you can even look on a smaller time frame. Here's a 5-wave move. It completed. Boom, there's a pullback. So on and so forth. And it just goes infinitely smaller and infinitely larger. So with that quick tutorial, you can see that we're getting late in this 5-wave advance. Again, it's not over yet. The 5th wave advance began in early 2016. It's the blue 1, 2, 3, 4, 5 move that we're looking at. We're currently in the 4th wave of that pullback. So what we expect is one more up leg before a major high is in. So that's definitely something, again, to be aware of, and take any real notable weakness within the next year very seriously, because it will look like the end of the 2009 through current times bull market. So let's drill in a little bit further here. We're going to take a look at basically what's happening off the 2018 low. The market had an incredible 2017. It basically just went up every day. It spiked up into the 2018 high in January, and since then has been in a kind of choppy mess. So this is why your portfolio hasn't done much this year. After the high in January, it is yet to eclipse that over 6 months or so. It's just gone sideways. It had a sharp pullback. It's gone back. It's gone forth. There's been a bunch of days where the market barely moves. It's been super slow. this pullback is not yet over, and that's pretty clear. This is counter trend movement, which just means that this pullback is not yet ended. The very clear objective expectation for what's to come is a down leg that's going to take us back to towards the 2018 low before the 2018 pullback completes. So once we get back down there, we'll be looking for that next leg of the long-term bull market. Again, it should be the final leg of the bull market. It has the potential to be a big move. A lot of times these moves towards the end of their move are the ones that are the biggest, the most profitable, so you don't want to get too jumpy yet, but I think you need to be aware that a major high is looming. So that's what we're looking at. Again, I don't think the 2018 pullback's over yet. I think we're going to see a sharper down leg that takes us at least towards, if not to, a new 2018 low. And at that point, price will reverse and spike higher from there. So just one more piece of information here. If you come back and look at this chart, you look at every single pullback that's occurred over the last 9 years, you can see it kind of spikes into a low, and then reverses. Spikes, so on and so forth. We do not have that spike to a new low, and that's another reason that I'm confident that the 2018 pullback is not yet over, so you have to be careful for that. But again, once we get back to those 2018 lows, we should find an important low and get another large up leg to new bull market highs. So, hey, I hope that's helpful. We do this stuff every day at TrendLizard.com. Come visit us. We give you a free trial. We apply Elliott wave theory to 40 different ETFs every corner of the market, and we're pretty good at it. So have a great day, and I'll see you soon. Thanks.